Welcome back to the Wall Street Podcast. Today we're going to dig into the Weilong Delicious Asia Leaders Conference 2025 Key Takeaways Report.
Right. This one's from Goldman Sachs Asia, published September 5th, 2025. The title is Confidence in Konjac and Stable Seasoned Flour New Flavor for Growth. It's based on a direct meeting with Weilong management.
Okay, so our job today is to cut through the detail and give you the essential insights fast. We're looking at Weilong's FY25 outlook, their channel strategy, and product growth drivers, really the why behind it all.
Exactly. So for FY25, management is aiming for 15% to 20% year-over-year sales growth. Pretty strong.
15 to 20%.
And margins.
They're projecting gross profit margin around 46% to 48% and net profit margin about 18 to 20%. Healthy numbers.
Okay. Let's talk channels. Discounters seem to be a big story here.
Definitely. Strong growth in the first half of 25. It's driven by more points of sale, yes, but also better per-store productivity.
Right.
And crucially, margins there are stable and healthy. They're clearly focusing on the big discounter chains. Right. And what about other channels? Wholesale.
Also strong. CVS PC, that's convenience stores, and general trade and schools showed high year-over-year growth. Good momentum there.
But not everywhere.
No. The traditional key accounts, the KAs, saw a significant slowdown, a clear divergence.
Interesting shift. And overseas, they have a target there too.
Yes. RMB 100 million for FY25, which is, around $14 million USD? They're calling it a foundational stage, though. It takes time. You know, consumer education, building channels, getting licenses.
But the potential payoff is there.
Seems so. The report notes higher pricing and a better margin profile overseas, even at this early stage.
Okay, let's pivot to products. Konjac is highlighted.
It's positioned as the key growth driver. They're targeting no less than RMB 4 billion in sales for 2025. That's roughly $550 million USD. A huge number.
4 billion. And there's a specific new product driving some of that.
Yes, the new sesame paste konjac flavor. It's already doing RMB 60-70 million monthly. The expectation is it'll hit over RMB 100 million in single-month sales by the fourth quarter, so rapid adoption.
What about their traditional seasoned flour products, the lattiao?
Broadly stable in the first half, even though they strategically cut some less popular items, the long-tail stuff. They're still innovating there, too. Things like spicy crayfish and BBQ flavors are meant to drive future growth.
And briefly, Fenchi kelp.
Right. RMB 200 million sales in the first half. That's up from RMB 300 million for all of FY24. Mostly organic traffic, though, not a primary strategic push.
Okay, let's step back. Module 1, Konjac, RMB 4 billion target. What makes Konjac such a critical driver? Is it just this new flavor or something bigger?
Well, it's definitely both. Konjac itself hits that health trend, low-calorie, plant-based. It's a snack people feel better about eating, but Weilong's innovation, like the sesame paste, makes it genuinely appealing, culturally relevant. It's not just healthy, it tastes good in a familiar way. That combination lets them grab share rapidly. It's smart product strategy meeting consumer demand.
Right. Module 2, channel adaptation. We see this split, strong discounters and wholesale, but weak KAs. Does focusing heavily on discounters risk their brand perception, or is it just smart adaptation?
I'd argue it's smart adaptation. It reflects where consumers, especially for snacks, are increasingly shopping convenience and value are key. Their strength in discounters and CVS shows they're agile, meeting shoppers where they are. The KA slowdown isn't necessarily a brand issue, but more about the changing retail landscape itself. They need to be where the growth is.
Okay, that makes sense. Module 3, overseas expansion. RMB 100 million target.
It sounds a bit cautious for a company of this size. Is this just testing the waters?
It looks cautious on the surface, yes. But building overseas takes real work, consumer education, distribution, regulations. It's complex. So the RMB 100 million isn't about massive immediate revenue. It's about laying groundwork properly. And the key factor, mentioned before, is the higher price point and better margins they see overseas. That justifies the careful foundational approach. It's an investment for potentially much higher long-term profitability. So, thinking about the impact on the general public, how do these strategies the channel focus, the new Konjac products, actually show up for you when you're shopping?
Well, you're simply more likely to find Weilong products, especially these newer ones like the sesame paste konjac, right there in discount stores and convenience stores. Where they focus their distribution directly impacts what you see on the shelf. It's a direct reflection of them chasing current consumer habits.
So we've covered Weilong's FY25 plan, the financials, the channel shifts, the product bets.
Yeah, it really highlights how snack companies need to stay nimble, constantly reading the market and consumer preferences to find growth.
And that leaves us with a final thought for you. In today's market, how fast do companies really need to be? Not just meeting demand, but getting ahead of it with products and distribution, all while juggling the complexities of going global.